Hi everyone, welcome to Dr. JJ's Virtual Academy of Commerce. These are all a couple of details related to me. In this video, I am going to deliver a lecture on the differences between management accounting and financial accounting. After you watch the full video, if you find the video useful to you, give a like to the video. Kindly do subscribe my channel and enable the notification so that you will get the notifications of my new videos on commerce and management subjects. Financial accounting versus management accounting. Let us discuss the differences between these two subjects on certain basis. The first basis of difference is purpose. With regard to financial accounting, the very purpose of the subject is to ascertain profit or loss and reveal the financial position to the stakeholders of the business. More importantly, to the owners or proprietor or shareholders of the business. How profit or loss could be ascertained? It is made possible through the preparation of profit and loss account. And through preparing the statement of financial position or balance sheet, we can easily understand the financial position of the business as well. Regarding the purpose of management accounting, its very purpose is to provide information to the management for effective decision making on internal operations. Regarding the second base of difference is reporting. Reporting under financial accounting is purely external, whereas reporting under management accounting is for internal usage only. It is submitted to the members of the management at various levels, which would facilitate effective decision making on their part. The third base of difference between the two disciplines is nature of information used. In financial accounting, it records the past. It records the historical information. Whatever happened, which could be measured in monetary terms, could be recorded. Therefore, it is of objective in nature. Whereas in management accounting, it is related to the future based on the past and present data. The interpretation of the data, which would be finally presented in the form of a report, is done using subjectivity. So there is a provision for personal bias. The fourth base of difference between the subjects is analysis and interpretation of data. Financial accounting simply provides consolidated information of the business as a whole. It doesn't come out with any analysis or interpretation of the results. It doesn't make the stakeholders to understand the reasons for increase in profit or reasons for the loss, if any, in a given period of a business. If you take management accounting, its main job is to do proper analysis and interpretation of the data department wise, division wise, or even individual wise if required. The next base of difference is flexibility. Financial accounting is really not flexible. It is rigid in nature, because it strictly follows the legal provisions or the provisions laid down in the Companies Act or the provisions laid down by the statutory bodies which are recognized by the government. What about management accounting? You don't find any fixed guidelines to be followed by management accountants. The requirements of the management is the basis for doing analysis and interpretation of the data, followed by submission of the report as well. The next base of difference is legal requirements. As per the legal requirement, it is mandatory on the part of every business enterprise to follow financial accounting. Whereas with regard to management accounting, it is purely optional. If a concern wants to make use of the benefits of the tools and techniques of management accounting, it can go for installing management accounting as per its convenience. Otherwise, it could be ignored. So it's purely optional. The next base of difference is frequency of reporting. Normally, financial statements are submitted annually, whereas with regard to management accounting, the reports are prepared and submitted as and when required by the management. The next base of difference is emphasis of principles. Financial accounting is supported by the established conventions, concepts and principles, whereas you don't find such conventions and principles with regard to management accounting. The next base is audit. Accounts are to be compulsorily audited under financial accounting as per the legal requirement as well. whereas no such auditing is required for the reports to be prepared and submitted by management accountants. The next base of difference is format of statements. Statements are prepared under different forms as revenue, capital, personal accounts, property accounts, etc. in the case of financial accounting. Whereas in management accounting, expenses and incomes are reported by various responsibility centers created by the management accounting system installed in a business enterprise. The last base of difference between the two subjects is unit of account. The whole business is assumed to be a single unit in financial accounting. The profit or loss generated by the whole business is calculated and reported. Whereas in the case of management accounting, every department or a division or even an individual could be assumed to be a unit of account. Their performance could be analyzed, compared with the standards, and reporting could be done. I hope I have done my lecture up to your level of satisfaction. Thanks for watching this video. I'll meet you in another video. Bye for now, everyone.